back. You're still with us on Startup Street. Venture debt investments in Indian startups has surged despite the ongoing funding winter. From just about $100 million in annual investments in 2018, venture debt funding crossed the billion-dollar mark for the first time in 2023, as per a Stride Venture report. Why is venture debt finding favor with Indian startup founders? Akhil Vishwanath caught up with the firm's managing partner, Apurva Sharma, to find out. Take a look.
LPs have become more comfortable understanding this asset class, putting money. The VC investors, the founders have become more comfortable taking it. So that, I think, has been a very big reason. Venture debt as a percentage of venture capital was very underpenetrated in India. It was, say, less than 3% 2-3 years back. It is about 17 to 20% in very mature markets like the US. And the growth is practically a result of education, of the fact that it was underpenetrated, and now it has grown because it was a very small base and hence it has grown very swiftly. Both of these reasons are there. Funding winter has, of course, nudged the founders to think of venture debt, because in 2021, founders had this perception that since they were raising equity rounds back to back within 6 months, equity was cheap, equity was available. So people were not thinking of alternate sources of financing, even for the right reasons.
The funding winter has certainly nudged founders to look at venture debt, and especially those in consumer products and fintech, because they dominated most of the venture debt investments in 2023. But do you see the scope of venture debt extending beyond some of these sectors and enter newer sectors? And what would you say some of the sectors that would be in focus for venture debt investors in 2024?
Great. So consumer and financial services, even B2B for that matter, are sectors which have real debt use cases. Going forward in 2024, we feel EV as a sector is going to be one of the biggest sectors users of venture debt as an asset class. And the reason for that is these are capex intensive. This is a capex intensive sector. If you look at the entire value chain, whether it's battery swapping, battery recycling, OEMs, or ride-hailing operators, all of them have some kind of capex needs.
Growth stage companies have tended to corner most of the funds, and especially 60% in 2023. And that's also because because of the funding winter, they haven't been able to have access to equity financing. Do you see the trend continuing this year, especially with several late-stage companies as well looking at newer debt instruments such as convertible debt?
Yes. So, if you look at the allocation of venture debt, the maximum number of deals happened in Series A and Series B companies. So that took up the maximum number of deals. But of course, in terms of value, Series C and beyond would have amassed close to 47-48%. And yes, across the ecosystem, people have understood that equity is, expensive, and people have resorted to optionally convertible debentures, compulsorily convertible debentures, because they haven't been able to find out a price, at which all investors are comfortable investing in. So some of them have procrastinated that discussion to later. So, these are discounted rounds that, it'll convert at a certain point in time in future or basis a certain milestone. And right now they are bridging it with a OCD or a CCD kind of structure.
Got it. When it comes to Stride Ventures portfolio, you've backed about 140 startups so far, from 3 funds, and you announced the first close of the latest fund at $100 million last year. When can we expect the close of the fund?
Actually, pretty soon. We are thinking of announcing the final close for our 3rd fund in about a month from now. So pretty soon we should be done with the fund 3.
You were targeting a corpus of about $200 million. Are you sticking with that target? And how many startups do you intend on backing in 2024?
So it'll be between 150 to 200 million. We'll see where we land at. In terms of number of companies, probably 40 to 50 new companies that we intend to invest in 2024.
Well, breaking news coming in there about Reliance and Disney. We've got Nisha and Mangalam here with those details.